Hey everyone, Cameron Lombardi back here with another stock market investing video. Today we're going to be talking about trading options through earnings, and specifically we're talking about big tech earnings here and going to be going through a couple companies that I have options trades on during the earnings. Real quick before we get into that, if you guys wouldn't mind hitting the like button, it really does help the video and help the channel grow. And I just want to say thank you to all the new subscribers. We did just hit 300 subscribers. I just really want to thank all of you for watching and supporting the channel. So with that being said, let's get right into the video, guys. The first position that we have here is Google, and we are selling a $110 put on Google. And Google is currently trading at $120.47, and its earnings are actually Tuesday. This position is expiring on 7/28, so this Friday we got paid an credit of $55 to sell this put option. So essentially, if Google stock does drop below $110 at the end of the day on Friday, I will then own Google stock at $110 per share. If it doesn't, I just keep my premium and move on to the next trade. And the reason I like this strategy during earnings is because I'm not trying to predict whether the stock is going to move up or down. I'm simply just saying, hey, I'm comfortable owning the stock at $110 per share. If it drops down to that price during earnings, then I think that's a good value for the stock. And then I will own 100 shares of the stock. And then I can just flip right around to selling covered calls on it or just hold it because I'm comfortable owning and holding Google. And you should only be doing this on companies that you're really comfortable owning the stock, because you don't want to be stuck with 100 shares of a stock with a big investment into it that you're not comfortable actually holding. So again, I'm not trying to predict the market here. I'm not swinging for home runs. I'm just taking advantage of the increased volatility of the options during earnings here. And we're just looking for slow and steady gains over time rather than swinging for home runs. Our next position here is on Amazon. So Amazon also has its earnings coming up, and its earnings are next week on August the 3rd. Amazon's currently trading at $130.40 per share, and we are selling our put option at $114 strike. So again, if the stock ends below $114 by next Friday, I will own Amazon at that price. And we got paid an average credit of $70 to sell this put option. Again, I'm selling these puts pretty far out of the money. And if you actually go into the options chain here and look at that $114 put, you can see it says -1 because I'm selling one. And the chance of profit here is 89%, okay? So pretty high likelihood that Amazon's not going to drop below that price. Now, again, this is just a statistic based on the price of Amazon at this current moment. That could easily change. It's not a for sure thing, but it's just a guideline to kind of go off of when you are trading options. Again, I like to play it on the safer side, not swing for home runs, and just make slow and consistent gains over time. All right, so that is our put on Amazon. And the last position that we have here is Bank of America, covered call, guys. I do own 100 shares of Bank of America at an average cost of $28.08 per share. And I've been holding these shares for a little while, ever since the kind of banking quote-unquote crisis this year. And I think that Bank of America is actually starting to make its recovery. And if we look at the 3-month chart, it's been trading pretty sideways. And then now it's got this big bump up here. And I wasn't trading any covered calls during earnings because honestly, I wanted to hold on to the stock and I didn't want to lose it at a price that was below where I think it was going to go up to. And now that it's around that $32 range, I'm back into selling covered calls again. So we have a covered call at the $33 strike, and it expires on August 4th. We got paid $16 to do this. And as you can see, it already says that I'm down $4. I'm not really losing any money. It's just saying that I could have gotten paid more to sell this covered call because Bank of America stock has moved up since I sold this call. But Bank of America is a stock that I'm definitely happy to continue owning. If I do get assigned to sell these shares, then I will flip right back around to selling puts and continue wheeling Bank of America. They just increased their dividend, and I think they're a great stock to own long term. And it's an easy one to trade the wheel strategy on because of how sideways it usually trades. There's not a lot of volatility. With that, there's also not crazy premiums on the options. But again, we're just looking for slow, consistent gains over time. Now, I haven't been really active the last week with trading options just because I've just been kind of waiting to see as we get closer to earnings where stocks are sitting, and I'm not trying to rush anything. And one of the main reasons I don't feel really rushed to make trades is because of this right here. So Robinhood offers a 4.65% APY. Basically, they're paying you 4.65% interest on your cash that you have sitting in the account. So even if I'm not actively making options trades, I'm still at least making 4.65% on any of the cash that I have sitting in my account, which to me is amazing. That's a higher percentage than most dividend paying stocks are right now. And so I don't really feel rushed to have to like chase trades. I can wait until the premiums are where I want them to be, the stock prices are where I want them to be, and I can sell options where I want to sell them and take the time for trades to kind of set themselves up rather than trying to chase them and sell a put higher than I want to. So if you guys are not using any sort of high yield interest account or anything like that, this is a super easy one to get started. You just download the Robinhood app. If you use the link in the description, it's the first link in the description below. You'll get yourself a free stock to get started. And so I'd highly recommend just putting your money into some sort of high yield interest account so that you can make your money work for you. Even if you're not actively investing, this is a great way to just let your money sit and earn more money on itself. All right, so that's all I have for you guys today. If you guys did enjoy the video, be sure to leave a like down below, comment any questions that you have, or if you're making any trades during earnings, what stocks are you guys looking at? Thanks so much for watching, guys, and we'll see you in the next one.